Hi, I'm Bob Jablonski with Jablonski Tax Relief. I'm an enrolled agent and a certified tax resolution specialist, and I help taxpayers nationwide resolve IRS debt, stop collections, and deal with levies, liens, and garnishments. If the IRS has filed a tax lien against you, or let's say you received a letter saying one was filed, this is serious, but it doesn't mean the IRS is taking your money or any of your assets today. What it does mean is that the IRS has placed a legal claim against your property, and how you respond can positively or negatively impact your credit, your home, and your future options. So, one of the confusions I get quite often is a taxpayer will come in and they're not sure of the difference between a levy and a lien. And when they get this lien, for example, they're going to think the IRS has taken something. But what the IRS, what the levy is, or the lien is, as I said above, is a legal claim against your assets, not taking your assets, but a claim against them. Think like you buy a car and the lender, you get a loan for the car, and the lender places a lien on the vehicle. What it means is you can't sell that vehicle or refinance it without paying off that lender and that lien. It's very similar with the IRS. They have a claim to your assets, and it's going to impact your ability to sell your assets or get refinance or get financing. A lien is a legal claim, whereas a levy, on the other hand, means that the IRS is taking your assets. They might be taking your bank account money. They might be garnishing your wages and so on. So, like I said, whereas a levy, bank levy will actually take the money out of your bank account. It'll freeze the bank account for 21 days, the bank will, and then they will send it to the IRS. That's not what's happening with a lien. There's no freezing on your bank accounts. However, like I said, it does have an impact if you're selling your assets, or it has an impact on your ability to get financing or refinancing of assets. So the other thing that kind of sometimes confuses taxpayers is how can they levy me? They filed a lien or vice versa. Well, they can, and it's quite common with taxpayers that I work with who owe higher balances. You'll see they are assigned to a revenue officer. The revenue officer will immediately file a federal tax lien against them. And then, based on their responses to that revenue officer, the revenue officer may also move forward with bank levies, garnishments, and other types of levies and seizures. It's not just, it's going to be the assets that you own at the time the lien is filed, but then all the assets you acquire after that lien is filed until it's removed for some reason. So that creates a problem not only currently with those liens that exist, but in getting future financing, buying a home, buying a car. So keep that in mind. That's kind of how a levy's really going to, or a lien's really going to harm you. And something that most taxpayers don't realize is that the IRS automatically has a lien whenever you file a return and they've assessed the tax, or they've assessed the tax through an audit and so on. They've sent you notification that you owe the money and there's a demand to pay. That's usually going to be the CP-14 notice, and you don't pay. At that point, the IRS already has a lien, but it's more of a silent lien. The public doesn't know about it until the notice of federal tax lien is filed, and that's when most problems begin for taxpayers who have liens filed. And it's called a notice of federal tax lien, or an NFTL, and it shows up in title searches. It's going to come up whenever you're refinancing, you're selling or buying property. It's going to affect business financing in some cases. One other difference between a lien and a levy is before the IRS can start levying you, can start taking your bank, can empty your bank account or garnishing your wages, they have to give you notice, a final notice of intent to levy, and give you collection due process rights prior to actually levying you in almost all cases. Liens are the other way around typically. What you're going to see is the IRS is going to file that federal tax lien, then they're going to notify you, and you're going to have some appeal rights at that point. But you don't get notified before it occurs, you get notified after it occurs. So why do they file the federal tax lien? It's typically going to be, you're going to see them with large balances when the balance is significant. You're going to see it quite often when it moves over to a revenue officer, where they're immediately going to file a federal tax lien. Or it can be when the IRS believes collection for some reason is at risk. those assets are at risk, and they want to file a lien to protect their interest. With a lot of the taxpayers that I work with at higher balances, liens are very common. When you're talking to the revenue officer, they're often not going to wait for you to resolve it. They're going to file the federal tax lien. So let's talk about some ways that a lien can be resolved. And option one we're going to talk about is a lien release. This happens when the tax debt is paid in full is one option. It's going to be released. The IRS no longer has the legal authority to collect. You might hear or you might watch one of my videos about the 10-year statute of limitations, where the IRS no longer, after that 10-year statute expires, has the legal authority to collect. And it's self-released. It's automatically released at that time. Often, also, when an offer in compromise is accepted, the IRS will release that federal tax lien. So this ends the lien going forward, but it doesn't erase the fact that the lien ever existed in the records. And option two is a lien withdrawal. A lien withdrawal will remove it from public notice as if it was never filed. So when can this be possible? Well, an obvious one is when it was filed in error. When it was filed in error, the IRS is going to withdraw that lien. It should never have existed. You have to show the IRS that it was filed in error and it will be removed. Another reason why it would be is if it qualifies for withdrawal under IRS criteria. And one common situation where I see this occur is taxpayers owes $25,000 or less. They set up a direct debit installment agreement and they make 3 consecutive payments. They can then request the withdrawal of that federal tax lien. And it can make a huge difference going forward to get that lien withdrawal. So some other options are a discharge. A discharge might be or is going to be when a lien is released from a specific property. It's not going to remove the lien, but only from that specific property. An example might be selling a home and you're not going to pay the lien off in full, but the IRS has given you permission because you're going to give them the proceeds. And the IRS will even do it in the case where there's no equity in that property. There are no proceeds that are going to come to the government or the seller. It doesn't benefit the government to keep it there. Actually, it may help the government not to keep it there because it may put the taxpayer in a better financial situation. Another thing is subordination. This is going to occur often. You're going to see it with refinancing. The IRS isn't typically going to allow the taxpayer just to refinance to get them in a better situation. What they're looking for is something that helps the government. What we hear as being it's in the best interest of the government. An example of that might be a cash out refinance where that cash coming out or part of that cash coming out is going to the IRS to pay down the debt. Another option might be the lower payments are going to allow the taxpayer to make larger payments to the IRS. In those situations, they're often going to allow to go get it through because it is in the best interest of the government. One way to avoid a notice of federal tax lien is if you or for some reason are aware that the government is going to file a federal tax lien against you, or let's say you want to buy you want to buy real estate and you're at risk for a federal tax lien to get filed. You owe under $50,000 assessed balance, and you set up a direct debit installment agreement. You can create that installment agreement without a federal tax lien being filed. So if you're proactive in this situation, it's something you can get done. So let's talk about some common mistakes that I see all the time. Well, you ignore the lien notice when there are options that you can take out there and you wait too long. Some taxpayers assume they're going to get into a payment plan, the lien's going to be released. It's not. Only in certain cases, like the example I gave you above, 25,000 and under, direct debit installment agreement, 3 payments, you can request that withdrawal. Or you're going to wait. They wait until they sell or refinance. Those are different situations where you're making a mistake. It's going to make your life a little worse if you handle it that way. As with everything I talk about with IRS problems, acting early always gives you far more options. So let's summarize it. Let's wrap it all up. We talked about a tax lien serious, but it can be manageable. There are solutions. especially to deal with everyday life situations. There are multiple ways that you can address the tax lien or reduce its impact. It's not a levy. It doesn't mean immediate seizure. There's just a claim to those assets, which can be cause substantial harm, but they're not there's not any immediate seizure of your assets. And the strategy matters, especially when you owe a higher balance amount. There's a whole lot more at risk. There's a whole lot more likelihood that you're going to have a federal tax lien filed. So strategy's going to matter. If you are someone with an IRS federal tax lien or an IRS problem and you want help understanding your options, you can schedule a confidential consultation with my office at Jablonski Tax Relief at 972-821-1991 or go to the description below or the comment below and click the link to get directly onto my calendar. Like this video if you find it interesting so others can watch. If you have a problem with the IRS and you want more advice, subscribe to the channel to learn more. And if you have a quick question about a federal tax lien issue, or you are interested in a different topic that I'm not covering, please leave it in the comments section below. I read all the comments.